Hello friends, welcome back to my channel. In this video, I'm going to talk about the types of investments available for you to invest. If you are new to investing and personal finance, you might not know where to start. There are many terms and jargons on investing which can make you feel scared. Now, before you start, make sure your financial health is good. Make sure you clear your bad debts such as credit card bills. They tend to have very high interest rates, which can compound to a large debt if you do not pay. Track where your money is coming in from and going out to. I have a video explaining in depth on how you should track your expenses. I'll link it up here or here and in the description box below. There are two types of investments, active and passive. For active investments, you manage your own investments. You plan on what to buy, how much to buy, when to sell, and when to allocate your investments. For passive investments, you put your money with someone else and they will help you grow your money. There are many different types of investments, and I will only introduce the common investments in this video. First, we have bank savings account. You get the lowest return on your cash, usually below 0.5%. You can get higher interest rates if you meet various criteria such as minimum spending, paying bills, crediting your salary, and maintaining a minimum balance in your account. You will lose the value of your money to inflation if you keep all your money in your bank account. Next, we have fixed deposits and bonds. It is something like an IOU. Returns from this group of investments are slightly more than bank savings account. They are generally risk-free, but bonds could be defaulted, meaning you will not get your money back if the company fails to pay its debt. The returns are usually higher if you lock in for a longer period of time. Generally, your money should be able to keep up with the inflation rates. Next, we have government-backed investments such as treasury bills, CPF, and 401k in the US. Your money is generally safe, but they'll be locked in for a long period of time before you can withdraw them. They usually have a higher interest rates compared to bank savings account. For the US 401k plan, your employer will have to match the amount of money that you save in your 401k. For Singapore CPF, your employer will also contribute a certain percentage of your income into your account. Take advantage of these plans as they help to grow your wealth faster. If you are enjoying the content so far, and this has helped you in understanding the investments that you can make, do click on the like button below to show your support. Only 12% of you watching are subscribed to my channel. If you'd like to see more of such content to learn and grow your knowledge and wealth, do subscribe to my channel as it will help with the YouTube algorithm. Next, we have exchange traded funds or ETF. Investing in an ETF gives you exposure to many stocks. For example, the S&P 500 index tracks the value of the top 500 companies in the US, like Amazon, Facebook or Meta, Google, and Tesla. There are many ETFs that tracks other indices such as the Nikkei 225 for the Japanese market and the Straits Times Index for the Singapore market. Next, we have stocks. There are two kinds of stocks, growth stocks and dividend stocks. Growth stocks are companies that are currently growing fast and has the potential to give high returns via a rise in the share price. For example, if you bought Disney shares at $30 in 2011, today, the price of one Disney share is $100. You earn $70 if you sell it. Next, we have dividend stocks such as Best Buy in the US and Sheng Siong Group in Singapore. Dividend stocks are generally well established and is unable to grow as much compared to their early stages. They distribute their profits to you in terms of dividends, giving you stable cash flows. There are many brokers out there allowing you to buy and sell stocks at $0 commission and platform fees, therefore making it very cheap to get started. If you need recommendations, you can check out my referral link below in the description box. You can get stuff like free stocks and cash when you sign up using my link below. Next, we have Robo advisors, funds, and insurance plans. These are usually passive investments on your end. Many funds and insurance plans are managed by human, and robo-advisors are managed by their algorithm. They are usually managed by portfolio managers who aim to beat the market index through stock picking. They charge you management fees and in some cases performance fees. They usually have higher expenses compared to ETFs as they are relatively more active in buying and selling underlying investments. For a bonus, if you have a large capital, you can invest in real estates. You might get a housing in the future. So the value of your house might increase, therefore making you a profit if you decided to sell it in the future. You can also rent out your house for monthly cash flow for rental. And there we have it, a list of the common investments that you can start investing in. I hope you have learned something new today. If you did, do click the like button, comment on what you have learned, and share this video with your friends. I post videos on personal finance and updates on my personal portfolio. If you like this content, subscribe to me and turn on the notification bell. You'll get notified when I post more content in the future. I'll see you in the next video.